All right. Oh man, perfect. Ba-ba-ba-bum. Then I'm gonna let Ari in first. Hey Ari, how are you?
Hey, I'm doing good.
Doing good. Nice to meet you.
Good to meet you. What's your name?
Likewise, My name is Francisco.
Oh, Francisco. Okay, that was in the
Yes.
text message that Nick just sent through.
Yes, sir. Yes, sir. Sorry, my computer was running a little slow, so I was like trying to log in.
Okay, so
Perfect.
how
All
many
right.
people do we have lined up for today?
We have 15 people in the waiting room. It looks like some more are joining in. Typically, these calls are very like relaxed, open-ended. A lot of these people either do land or they do houses in some form or fashion, so they're in the real estate industry. So I'll go ahead and let them in. I'll introduce you. You guys, I think I'm familiar with your company. I'm not familiar with you through EIMG with James Lascaria, I believe. So he mentioned you guys as well. And then from my understanding, you guys do business credit, 0% interest, credit cards, and you guys show them how to leverage that into for their business, right?
That's right. Yep.
Perfect.
And are you going to be recording?
Yes, sir.
Okay. Okay. Does Nick have a school community?
He has a circle community. Yes.
Let's-
Perfect. Let me go ahead and let everyone in. Welcome, you guys. Thank you guys so much for coming on our Tuesday's call. Happy New Year. Nice to see some familiar faces here, as always. And I'm excited for this call because we have a special guest by the name of, did we change? I think you changed your name, Ari. Our partner Ari here is going to talk about business credit and 0% interest credit cards. He's with a company called Fund and Grow, who has partnered with Lean Mining Pros. And then I'll let Ari take the floor, have him introduce himself, and then we can go ahead and open it up for Q&A right after. Okay,
Awesome.
sweet.
All right. Well, thank you, Francisco. Appreciate that. And my name is Ari Page. I am the CEO of Fund and Grow, and I'm very excited to be here today to introduce everyone to using 0% funding for your businesses. And how does that work? How can you use a credit card like a line of credit? So we've been in this industry for quite some time, for about 20 years. And we have funded 35,000 business owners with $2 billion worth of these business credit cards that can be used like a credit line. And from all of that data that we've taken in over the years, we have found that by going through our process, our clients get 70% higher credit limits than what they'd be getting on their own by applying for credit cards on their own without having a strategy and a plan and knowing how to do it. So that's what we're going to be going over today. And this is a picture here of me and my team. And we're down here in Florida, we're this in the Sunshine State. I'm not sure where everyone's joining us from, but hope it's nice and warm. That you've had a wonderful beginning to the year so far. So we'll just go ahead and dive right into this. And Francisco, cut me off and make sure that you clarify anything that doesn't make sense or any questions that's coming in. We can just answer them, in real time. And with that said, I'll go ahead and get started. So we are talking today about
Gotcha. All right, let's rock and roll.
awesome. So we are talking today about building up to and over $250,000 without putting up collateral or assets. And you can use this for any type of land deal or purchasing real estate or rehabbing. And we're going to talk about how you can fund an escrow account directly with a credit card, turning it essentially into a line of credit. And these are business credit cards, so they do not report to your personal credit report. And the wonderful thing about this is that the 0% is for a 9 to 18 month period of time. So there is no other loan on the market that is at 0%. And with card stacking, you can end up getting access to these every couple months. You can do another round of funding and you can get access to more of the 0% credit cards. Now, because they don't report to your personal credit and they report instead to your business credit, you will keep your credit utilization free and clear on your personal scores, meaning that your personal scores will stay nice and high so that you are easily lendable for any other things that life throws at you, whether it be for personal stuff or even for other mortgages, or whenever your credit is ran. It's not going to bog down your personal credit. That's one of the main things of using business credit. Now, let's say that you're an investor and you don't necessarily see yourself as a business. Well, that doesn't mean that you can't use business credit. You absolutely can use it, and we're going to show you how to use it and how you can build your credit, eventually being able to get things like corporate mortgages. Now, business credit cards do not require you to provide tax returns. This is called stated income funding. And once you have access to them, you essentially become a cash buyer. Now, you're not actually pulling the cash off the cards, but you're able to fund an escrow account at title directly with a credit card. So the seller does not know a difference. It doesn't know the difference that you actually used a credit card to put your money in to use for down payment or earnest money. And of course, you can use a credit card for anything that a credit card is used for. So let's give an example here of a client. This is a client that went through the process. Now, what you're seeing here might look a little complicated, like there's a lot of numbers on the screen. But what you're seeing is 3 rounds of funding. I'm going to go ahead and circle that first round. So the first round here was done in November of 2024. You can see that by the dates. Now I'm going to go ahead and circle the second round of funding. And then, of course, here was the third round. So all of these credit accounts were applied for under the client's LLC. So that's why this is all business credit. Now, if you don't have an entity set up, we can help you get an entity set up. You can be a brand new business owner and still get access to business credit cards. So this was done with over 3 rounds, but let's just focus on the first round for a minute. So I'm going to circle the accounts that the client got on the first round. And as you can see, most of them came in declined. One of them came in at 15,000, and that was on November of 2024. But after the client went through our negotiation process, you can see that they actually received quite a bit of funding. It was at 30, 40, 50, 60,000, 61,100 just on that first round of funding alone. And then over the next 2 rounds of funding, they received a total of 351,000 in funding. Now, this client would have only got these initial cards here that you're seeing in this first column if they had done this on their own without going through our process. So this is definitely 70% higher limits when you look at what they would have gotten in this initial column compared to the final approved column. So that's just a quick snapshot of what we're going over today. We'll get into more examples of it, but just so that everyone has a clear understanding of what we're talking about.
Real quick, Ari, you also mentioned something. I don't know if you're going to touch on this more on the later slides, but you mentioned something about using these business credit cards as escrow accounts or using it to fund escrow accounts. Can you touch on a little bit more of that use case as well?
Yes, I will. Give me just one moment to go over this slide, and then we're going to touch on that actually on the next slide.
Sweet.
So that's a really important aspect of using credit cards for real estate is to be able to purchase anything that you want. But first, let's discuss separating business from personal. So a lot of people are probably using their personal credit cards. And when you're using your personal credit cards, you're not building your Dun& and Bradstreet, you're not building Experian business or Equifax business. And that means that you're not getting exposure on those credit bureaus, which means that you're not going to be able to eventually get more lucrative loans. So it's really important that we start to use business credit cards because simply using a business credit card, getting access to it, using it is going to give you exposures on these other credit bureaus like Equifax business, Experian business, Dun& and Bradstreet. That way you build a paydex score. And when you do that, you end up being able to get access to even more lucrative forms of funding. For example, corporate credit, corporate mortgages. Like I have a bunch of different commercial buildings that I purchased, not with business credit cards, but with actual corporate mortgages. And that first started for me by first getting access to business credit cards to give me the exposure on these bureaus. But then after I got exposure, then I was able to get approved for actual mortgages that had nothing to do with me personally and were completely in my business's name. So it's really important to build this separation between business and personal and to stop using your personal for everything within your business. And that's one of the things that simply by using business credit cards, you're gonna build that separation. So let's touch on what Francisco just mentioned of using business credit cards for essentially any expense. So you can essentially turn a business credit card into a line of credit when you have the right technology, when you have the right payment services. So you can use a business credit card, for example, to fund an escrow account. And as you know, most title companies don't directly accept credit card to fund an escrow account. Some of them do, but most don't. But we're going to show you how you can do that with it doesn't matter which escrow, which title company, you can do that through using payment services. So you could pay any contractor, even if they don't accept credit cards, because a contractor will accept a check, they'll accept a wire, they'll accept an ACH. So you're able to pay them. You're able to use your credit card like a line of credit. You can even pay for things like mortgages, taxes, utilities. You can pay any business, any vendor, as long as they're a legitimate business, you can pay them. But most of the time, most of the businesses that you go to, they're going to directly accept credit card. So that means you don't even have to use these payment services. So these payment services do come with a small fee, but the great thing is that this option exists in the case that you that the business does not accept credit card. Again, most businesses accept credit cards. So this is only in the rare instance where you're dealing with an escrow, with a title company, where you're dealing with a company that does not accept credit cards. But for example, if you're doing a rehab, you're going to Home Depot or Lowe's, they all accept credit cards. So these payment services essentially allow you to become a cash buyer and you can purchase anything. Now, you might be thinking, well, I don't want to pay a 2.9% fee, and that's if you do a wire. If you just send a check, it's going to be less than 2.9%. But the great thing is that credit cards actually give you cash back. So simply by using the credit card, you are going to get cash back. Here's a couple examples of some that I took screenshots from. But over in a 1 year period of time, I could easily get 10,000, 15,000, 20,000 back, depending on how much I run through my various credit cards. And so if I'm purchasing something, if I'm spending $100,000 a month and I get 5% cash back, that's $5,000. If I get 3% cash back, that's $3,000. Now, I'm not talking about making up expenses here. I'm talking about if I'm actually spending 50,000 or 100,000 or more than that in my business that I would have been spending out of a checking account, that now I switch it over to using a credit card instead. So business credit cards are the only loan that will actually pay you. A mortgage isn't going to pay you back. A auto loan isn't going to send you a check. A hard money loan is only going to cost you money, not pay you back. So a business credit card is the only way that in the simple using of the credit card that they pay you. And the reason for this is because they have interchange fees. So how can they pay 0%? How can the interest be 0% and they pay you something? Well, that's because there's what's called interchange fees. Every time you swipe your card at a vendor like Home Depot or Lowe's or any place, any business that you go, that business is paying a small fee. The banks take that and they split that with you. They basically give some of that back to you. That's how they can offer these cards at 0% for the introductory period, as well as give you cash back and rewards and airline miles and so on and so forth. So that's a real huge advantage of using business credit cards. Now, we are big proponents of all of the different forms of funding, whether it be hard money, private money, DSCR, mortgages, HELOCs, maybe not so much of SBA because those are very difficult to get and you have to like give up your firstborn. So we don't necessarily recommend those. But For those that want to use that, the option is there, although it will take you a very long time. But most traditional loans do take a long time. Heavy paperwork, collateral, high interest. There's points for closing on pretty much every loan except for on credit cards. So credit cards are a vital part of the capital stack. That means that even if you are using other loans, you want to start using business credit within the capital stack because it gives you easy, versatile money that you can use anywhere. Money that's not tied to a deal. Money that you could spend on rehabs, on down payments, on earnest money. You could use it on inventory. You could use it for payroll. I mean, in many cases, 60% of the cost of a rehab is payroll. And you can use a business credit card for that. And you can actually move forward very quickly and get access to this type of funding really quickly. So let's talk about using credit cards as a form of asset protection. So you may not have thought of how that could possibly work. Credit cards as a form of asset protection. Well, I'm sure all of you guys have done different projects where you're dealing with a business or a contractor that you may not be sure about. Maybe it's your first time working with them. So let's give an example of a client that's replacing a roof on a flip. So let's say that the roof costs $20,000 and they pay the roofing company and the roofing company comes out, but they don't finish the job. They're not able to get the roof to pass inspection. So that means it gets red tagged. And now the roofing company, they're going to blame everyone except themselves. And so they blame you or they blame the inspector. And either way, they're not getting the job finished because they don't, they feel like they've already done what they need to do. And I'm just using a roofing company as an example. This could be an electrical contractor, a plumbing contractor. It could be any type of business that you're working with. Well, instead of you going to small claims court or arguing with that vendor, all you have to do is dispute the charge, initiate what's called a chargeback. You just turn over the credit card, you call the phone number on the back of the credit card, you talk to the bank, you explain to them the situation of what this business, this vendor is doing in terms of not finishing the job, and then they will actually reverse that transaction. What that means is that $20,000 that you paid will be reversed out of that business's bank account and back onto your credit card while they sort it out. Now, the bank becomes your enforcer. Now, instead of you arguing with this vendor about getting the roof completed, the bank is telling them, listen, if you want that 20 grand, you better go finish that roof. Does this make sense, Francisco?
Yes, sir. Absolutely.
Have you ever thought about using a credit card as a form of asset protection?
No, but I've heard a lot about Fund and Grow, especially through EIMG and James. So I've seen a lot of good use cases of people that use you guys. And I think one of the biggest ones that I've seen is, even though it's not in necessarily this particular space, I've heard people use you guys for marketing expense to cover like all of their marketing. And then that's basically their marketing budget for the 0% interest cards.
Yes, marketing and using credit cards for pay-per-click is huge. So with pay-per-click marketing on Facebook, on Google, on YouTube, you have to have a credit card. You can't even use a business bank account because they want you to insert a credit card in there. So here's some examples of some commercial buildings I bought. Of course, the Fund and Grow building, and here's another 3-unit building. And so these are corporate credit accounts that I received that after building my business credit profile. So simply by using business credit cards, you're going to build your business credit profile, and it makes it really simple, really easy to be able to get access to more lucrative forms of funding. Here's some properties that I've recently rehabbed using 0% cards. Now, I could have rehabbed these properties directly out of my bank account, but why do that when I could get 3 to 5% cash back? So instead, I floated the cost. I got cash back for all the purchases. For all the vendors that I needed to work with, I had the ability to charge back in the case that they didn't do what they say they were going to do, which they all did. But either way, I want to run them through my credit cards so that I can get that 3% cash back. Business credit cards are the only loan that will actually pay you back. So let's look at a few more clients that have gone through this. Here's a client that came in at a 690. Now, admittedly, that's a pretty low credit score. So they went through the 3 rounds of funding. So the first round of funding was in December of 2024. I just circled that first round. Then here was the second round about the midway through 2025. And then in October of 25, here was the third round. All of this was done under the client's LLC. Now, if you don't have an entity set up yet, we can easily set one up for you. But look how in their first round of funding, all the cards came in declined. Without going through our process, they never would have gotten these cards approved. So a lot of people don't take rejection well. And after this, if they had gone and applied and got declined across the board like this, do you think they would have continued moving forward and applying again and again? Of course not. And so what you see under this initial column is what first came in during the application process. And then what you see under this approved column is what they got after going through Funding Grow's process. So the client ended up walking away with 144,000 with a 690 credit score. So they would have gotten about 50,000, this $39,000 card here and this $12,000 card here by applying on their own. But instead, they got 144,000, taking it from something that is just a mildly useful to an actual war chest that they're able to use. So that's more than a 70% higher limit than what they would have gotten on their own. And honestly, this client wouldn't have even gotten this under the initial column because that we put a lot of work in onto the client's profile before we even apply in terms of fixing things on the credit report and the strategy of which banks we're going to go after. So even these cards here, the client not wouldn't have necessarily gotten, and this is only in round two and round three. In round one, all of the cards came in initially declined until they went through our follow-up process. So this is how the building process works. You don't start with a huge amount of credit like this that doesn't report to your personal credit because this is all under the entity, all under the LLC. This is a building process. Funding grow. This is about growing the amount of funds that you have access to and being able to get access to new 0% cards over a prolonged period of time. So let's look at a client that's a little better qualified. So this client has a 790 credit score, and in just 2 rounds of funding, you can see just 2 rounds of funding here, all under the LLC. The client received 338,000 in funding. And look at this, a $60,000 card, a $143,000 card. And then once paired with the payment services that we use, these cards are all actually like a line of credit, not just a credit card. They can be spent on whatever the client needs. So here's a really well qualified client at 800 FICO score. So again, same process, 3 rounds of funding, all under the LLC. And this client would have gotten maybe 70K in the initial application process. But then after going through our system, they received 351,000 in funding. So this is the common story, guys. You'll start with a lesser amount. Then after going through negotiations, then you get a larger amount. Then after going through rounds 2 and rounds 3, you end up getting even more. And then you will be able to have access to more funding even on if you end up working with us again. So most clients are going through about 3 to 4 rounds of funding. They will, in many cases, sign up, year after year, and then just build that amount larger and larger. For example, I personally have around 800,000 in this form of funding. So this is as easy as getting onboarded. Then we strategize with you. Then we work you through the applications. We actually do all the applications for you. And there's a couple conversations that we need you to do with the bank just to verify yourself with the bank. We can't do that because you have to actually be on the phone for that, but it's super easy, just a couple phone calls. Then you get the funding. We help you with that in terms of being able to spend it on what you want to spend it on, walk you through that process of how to use those vendors to fund an escrow account, for example, and then your business grows. So here's Jake, who's in the real estate industry, And he tapped out all the different forms of funding that he had access to: mortgages, private money, hard money. And he didn't realize that you could use 0% cards. So he went through, I'm not sure how many rounds here, but he used one, maybe a couple rounds of funding, got 223,000 in 0% cards, and said he had a 4x return on his ad spend. So that's absolutely huge. So he was using it, as Francisco mentioned, for advertising. And we have clients that are in all different industries, and they're using it for different things, for maybe advertising their properties or for a whole variety of things. They could be using it for inventory or for rehabbing or for paying down payments. No matter what it is that you're involved with, if you're running a business of any kind, then you can use business funding.
Y'all's right about.
So let's talk about how we can help you. So if you're interested in building up to 250,000 in funding, then we have three different options for you. The first option is our two partner option. So most businesses we've found have two partners. It's either partner A and partner B, a husband and wife. It could be two business partners. And so what you get access to here is a discount. So this program is usually a $4,000 program that through Nicholas's system, we're giving you access to this at 34.97, so a $500 discount. Now, if you don't have a partner and you're just one partner, you're just one person, then you still will get a discount. Instead of paying on our website $3,000 for the one partner program, you'll get a $300 discount and get it at 26.97. Now, these are our membership options. The membership options of the two partner program or the one partner program greatly reduces the cost. But if you don't want to pay up front and you would prefer to pay after we get you the funding, then we have this option, the 8% option. I know it seems like we got a whole lot of options here, but three different options. The 8% option means that we will get you the funding first, and then we will charge you 8% of the funds that we set up after we actually set it up for you. Now, the 8% option is obviously a lot more expensive. So this is why most clients go with the two memberships. So if you want us to finance all the work ahead of time and do all the work for you, it's going to cost you a little bit extra at 8%, or you could reduce that cost. You could cap that cost at 34.97 or at 26.97, depending on if you're one partner or two partner. And so what I recommend you do is scan the QR code or browse to fundandgrow.com/lead mining pros sign up. So you could just take a screenshot of this on your screen right now, take a picture of it, and then that way all you have to do is click on that QR code on your phone, or just go to fundandgrow.com. Francisco, would you be able to send that link? Oh, wow, look at that. Ty was saying that's good. I was charged 10%. Yeah, that's a lot to be charged. So let's go ahead and get that. We'll go ahead and get this link sent out through the chat here. All right, guys, I just sent that through the chat. So just go ahead and click on that link, and that will take you directly to the sign up page. So now would be a great time. If anyone has any questions, let's just go ahead and get your questions answered, and we could even unmute you. I think we could do that, Nicholas. Let me know. But if anybody has any questions, now is a great time to ask them.
Yeah, you guys can go ahead and raise your hand or you can unmute yourself. Troy, I think we got Troy first.
Yeah, thanks for putting this together, Francisco. Thank you for hosting. Question I had is you mentioned about the first round and FICO credit score. Is the initial round to try to get the credit for the company using your personal credit to start with?
Yes. So that's a great question, Troy. So when a bank looks at your personal credit, they're using that to determine your credit worthiness, but the credit cards do not report to your personal credit. They are going to report to the entity, to the LLC or the S corp that you use. So they're going to report to the tax ID number of the business, not to your social security, not to your personal credit report.
And is it possible to establish credit for the company without ever having to use your personal, say, social security number, credit score?
So there is forms of funding that you can get. It's called corporate credit. However, you're not going to get this type of credit like credit cards that you could spend anywhere. You'll get limited accounts at certain vendors that you have to purchase things directly from those vendors. And so that's a much longer, arduous, drawn out process. The best way to be able to get access to business credit is to allow them to look at your personal credit report, and then it reports to the EIN number. Now, if your credit isn't in a good shape to get that, then we can also help you with a referral to get any kind of derogatory items on your credit report deleted, to get that cleaned up. It's a separate company, but I highly recommend going through that process, because if your credit isn't in a good shape to be able to get approved for business credit cards, then we got to get that fixed. That's the next step in that case. Now, if you have a credit partner that you work with, for example, if you're married, if you have a business partner, some clients will use their adult children that they work with, then that will unlock for you options right away where you can work with them as your credit partner. And that's why we have this two partner program, and you can start moving forward with getting credit right away.
Thanks. And that led to the last question. The average time frame if somebody comes in with a credit score like the 619 you mentioned, going through all the rounds to be able to establish higher level, what does that time frame look like ballpark?
So when a client gets started with us, their first round of funding will generally come in within 14 to 21 days of getting started. That's their first round. On the first round, if you have a lower score that's in like the 690 credit range, then you're looking at, just like in our example here, of getting on the lower side. So this client, for example, got was it 30, 30 some $1,000 on their, 33, 34,000 on that first round. But then over the next two rounds, they built up to 144,000. So that's over three rounds. Three rounds could take up to 12 months. And our service is designed to do that. So you're not just paying for one round of funding with the membership, you're paying for multiple rounds, and you're paying for us to build you the credit. And now after that, after this client got 144,000 in funding, they had a much easier time when they re-signed up with our program. Then they were getting much larger amounts of funding rolling in right away. This right here is an entry level person who had a very low score that needed to build up.
Cool. And sorry, one last thing. The 8% that you mentioned, is that in perpetuity?
So the 8% program is and let's go ahead, I can bring that up real quick. So the 8% program is for, let's see, are you able to see this on my screen? Or are you able to
Yes.
see the three memberships? Okay.
Yes.
So this right here is one single intensive round of funding. So if we get you $100,000 on that first round, then you'll owe $8,000, because that's what 8% of 100,000 is. So in this case, there's no upfront costs, and we will do all the work for you. You can pay from the funding you get. You can set a funding cap. If you say, I only want $50,000, that way you're not having to pay for 100,000 if you only want 50,000. Again, the round comes in about 14 to 21 days. And so if you want us to then do another round of funding at the 8%, then you could do that again. But we're not just going to automatically move you forward into a second and third round under the 8% program, because we need to make sure that that's something that that works for you.
And if I wanted to, I could do the 8% and then on the second round decide to pay for upfront.
That's right.
Thank you so
So
much.
you could, so essentially, Ari, I'm pretty sure you had people do this. You probably had people do the first option where it's the 8% on the back end, and then whatever funds they get, they use to pay for what the other two
Exactly.
options.
Yep. So now,
Gotcha.
guys, remember we do have payment plans. So if you want to use a payment plan, like for example, for the one person program, you could get started today for as little as $637. So I should have mentioned that if you want to use a payment plan, there's payment plans available for both of the memberships to make it really easy and affordable. So we many times a client will sign up using the 637 payment for the single program or the 797 payment for the two-person program, and then by the time the second or third payment even comes into play, they already have credit cards and they just pay off the entire rest of the thing using the credit cards that we've set up for them.
It's not bad. And what would you say? Can you touch on some of like the credit requirements? I know you gave the examples of the 690s, the 720s, and all of that good stuff, but what's a good baseline that people should aim to have their credit profile when they come to you? And then what is some of the things that you will recommend to improve their credit if they're not credit worthy right now?
So we recommend that you have at least a 680 credit score when you come to us. And of course, if you have a credit partner, then that will double the amount of funding that we can get for you because you can put up to two people into the program. And under the elite partner membership, that's for two people. And then that way you can get access to more funding. And now, if you don't have a 680, it all depends on why your scores are low. If they're low just because you're carrying a heavy, excuse me, as you're carrying a heavy balance, in other words, your credit cards are maxed out, then you would need to pay off your credit cards in order for your scores to go up. If your credit scores are below a 680 because you have late payments or derogatories or bankruptcies, then you would need to go through credit repair in order. That would be your next step in order to be able to access this type of credit.
Sweet.
Awesome. So we're going to get to Kyla's question real quick. Oh, actually, um, let's first start to with Nick. So Nick says, "Hey everyone, I signed up for this myself 2 weeks ago. I had to pay down one credit card for 1,000 to be eligible to get the 0% cards." Yeah, so Nick must have had one card that was over 35%. So now he's in, and notice we're not going to move a client forward unless they're in pristine, perfect condition to get the maximum amount of funding possible.
Yeah.
So he says, now I'm in the process of applying for those cards with our guidance. It's a completely guided process, and I can appreciate that because I'm too busy to manage it all myself. So,
Yeah, absolutely. And yeah, I just wanted to jump on here and be like, guys, I actually signed up for this. It's going really well so far. I My credit cards are always in use because I use them for cash back. So I actually don't use debit cards for anything else. So my hard part is staying under that 35% right now. But yeah, it's going really well. And I'm excited to be able to, I mean, we all want 0% interest. That's like the same as cash, it feels like. So I'm excited to get this, to deploy it for my real estate deals and even marketing for my own business as well.
now the great thing is here with Nick's situation, once you get these credit cards that are reporting to the business credit bureaus, you're no longer going to have that 35%
Mm.
utilization ratio. So now you can use your cards all you want and your credit score is going to stay high and you're never going to have to worry about these utilization issues ever again.
Got it. And I get that now because right now they're referencing my personal until I have more business established, right? And that's kind of what you're saying. I will like alleviate that need to keep my cards paid down. Is that right?
Exactly. Yep, that's exactly right.
Yeah. Well, then, Ari,
So,
thank you. Thank you for jumping on. If anyone has any questions about my experience so far, you can feel free to ask me. But, he actually was telling me about this. And when he was done, I was like, how do I sign? I paid him before the call was over myself. So it was a good shout. But anyone could also reference to me as well if you guys need any help.
yep.
Sweet.
All right.
We also
So,
have we also have Kyla that has a question, and then I'll ask after she goes, I'll ask Tish question.
yes.
Okay, thank you guys so much for this. This came at just the right time. So, not judging by, but based on what I've been hearing, I might need to, I too might just have to pay off one last little, payment on my credit report. But once I do, I definitely do think I will be using you guys for funding for my LLC. Can you kind of go into what rounds look like? It's kind of my first time kind of getting into the business funding with an LLC, and then how we could use it, let's say, for like a duplex, for example, if you don't mind.
Yeah, perfect. So the rounds are essentially different card stacking rounds that we're doing. So, like for example, here on the screen, you can see this was the first round that we applied for this client. It was one, two, three, four, five cards. And when we first applied, the client got declined on most of them, but then going through our process, they ended up getting approvals on all of these cards here. So then after going through rounds one, then rounds two, then rounds three, this client ended up with 351,000 in funding. So it's a building process, and the more that you get access to, the easier it is to get access to more. So once you
Okay.
so once you have access to the cards, then you can start to use them like a line of credit by using the payment services that I mentioned. So that way you could fund an escrow account, or you could pay any type of vendor even if they don't accept credit cards.
I see. Okay. Okay, thank you. I wanted to, so the phone number on the screen, on the link, sorry, the phone number on the page that had the QR code, um, if I call that number, would I speak with you or like a representative? Because I'm interested, I have more questions, so I wanted to get more of like a,
Yes. So if you hit extension one, you'll speak to a business development manager, and they will
okay,
put you through a pre-qualification and let you
okay.
know exactly where you're at. That way you get a free business credit consultation, and you'll
Oh, great.
know we want everyone to have perfect alignment before ever getting started.
Okay. Thank you so much. That answers my question. I appreciate you guys. And thanks again, Francisco and Derby for having, these awesome guys on the call today.
No problem.
Thanks for your questions, Kyla.
Yes,
All right,
sir.
so
Thank you.
so Tish has been waiting. So Tish asked, will the credit card inquiry be reported to our credit initially? So when we look at your credit, Tish, when Fund and Grow looks at your credit, there will be no credit inquiry. But when we move forward and apply for you, there will be credit inquiries from those applications because those banks are actually extending credit to you. And so in that process, there will be inquiries. But the great thing is that those inquiries are not as bad as you think. Everyone's very worried about the credit inquiries, but 85% of the time when we apply, as you saw in those screenshots, 85% of the time the inquiry converts into an actual approval. So you just give it a couple months and your credit scores go right back where they were. Inquiries only impact your score very slightly. And I mean, obviously, if you go to an auto dealer and they run 27 inquiries on your report, yeah, that's not gonna look good. But in this case, there's no way to get access to the business credit cards without the banks looking at your report, which will put an inquiry. So then Tish has a follow-up question. How long are each rounds when you join the membership? So so I think what she's asking, how long in between each round? So the first round will come about 14 to 21 days after getting started. Then the next rounds will come usually about 2 to 3 months after that. And then the next round about 2 to 3 months after that. If you work together with us really closely, you can do 4 rounds of funding within 1 year, as long as you're really moving forward and following the directions of our associates. And Tish, let me know if you have any other follow-up questions and if I fully answered those questions. So Troy's asking, what is the success rate? Have there been clients that signed up, follow the program precisely, but were unable to receive credit lines? Well, we have a very low rate of people not getting anything. That's just we're not going to even apply for you if that's the case. If we're going to look at what your credit is before we ever apply, so that's not going to happen. But as you can see on your screen, we do have a money back guarantee. So our success rate is very high because we are looking at your credit before we ever take you to the bank. So we already know that we're going to get approvals. And we can't control every aspect of the bank, and the banks do change from time to time. in terms of from quarter to quarter. Sometimes they're lending out a little bit less, and so their requirements are a bit more stringent. Sometimes they're lending out more, and the economy is doing a little bit better, and then they're lending out more. So, but in terms of not getting anything, that's very unlikely. It might be that instead of getting 90,000 on your first round, you get 70,000 on your first round. But that's where this is an entire building process. This is something that's going to build over time. We're going to do multiple rounds of funding. And if we don't do good in one of those rounds, we're going to give you another round at no cost. We want to make you happy. That is our entire purpose here, is to over deliver for you so that you come back year after year after year and you work with us so that we can continue getting funding for you. This is what we do. We're very good at doing it. Ty says, I'll definitely be reaching out. Awesome. We are looking forward to that. Nick says he's out of here. Well, I'm thankful that Nick stopped by.
Absolutely.
Um,
I think Dexter had his hand up. I don't know if somebody answered this question already, but Dexter, if you still have your question, you can unmute yourself.
Oh yeah, definitely. And I appreciate this class. It's been amazing. I kind of popped in a little late. It looks like as far as the rounds, you like to have like maybe a 6 month buffer between like when you initially set it in and then the next go round.
oh, that depends. Sometimes clients will wait that period of time because they haven't effectively used the credit, and so they want to use that first round first. But so
Oh,
some
okay.
clients, it's going to be 2 to 3 months. Other clients, it might be 5 to 6 months. And you could even put your program on hold in between so that the clock doesn't run out. And that way you can really get access to at least a minimum of 3 rounds of funding.
Amazing. Yeah. That's all I had. I appreciate it. Thank you though.
Absolutely. Thank you for your question.
Ari, I
Yeah.
also had a little bit more question on you mentioned corporate mortgages. You did some slides on, some of the rehabs and the flips that you did. Can you speak on a little bit more of corporate mortgages? Does that just basically entails all of the line of funding that we get through these rounds and then we just use it as a line of credit, or is it like an actual mortgage that we have to pay like a monthly fee for or whatever the case may be?
Yeah, so once you've utilized business credit cards and you've built up a Dun and Bradstreet rating and Experian and Equifax business rating, then you'll be able to use the revenue of your company to get access to actual corporate credit mortgages, corporate mortgages. And a corporate mortgage is very much like a regular mortgage. That's pretty much identical, other than the fact that it's not going to report on your personal credit report. So you would have monthly payments on that. It would be just like any other mortgage.
Gotcha. Sweet.
I had
Awesome.
one more. I'm sorry. I kind of hopped in a little late, so I apologize if I missed this, but I seen you kind of go over, I guess, the different credit scores starting from like 690 all the way up. But ideally, is there like a certain score that your clients come that you can help them with? Like kind of give them like a sweet spot, like 700, 750 or something like that?
Well, let's put it this way, Dexter. The higher your credit, the faster and the better the process will go. The lower your scores, and our entry level score is a 680, 690-ish. The lower your score, the more building that will be needed. The less you'll get on your first round, the more that we'll have to build. But the more that we build, the better off your profile is going to be. The more access to business credit cards you have, the higher your business credit profile is, which makes it easier and easier for us to get you access to more funding.
Got it. Thank you. I appreciate it.
Absolutely. All right, guys. Look, we have still a ton of people on the call, so I know you guys have to have some questions about it. Feel free to come. You can either type your question in here or just ask it in front of the whole group. If you're a little bit shy, then just go ahead and type in your question.
Yeah, this is some good stuff. I've seen there was a friend of mine in EIMG who he does land. Jesse went through your guys and he was telling me that this was probably like almost a year ago though, but he uses you guys to just purchase his land flips. And that's how he finances some of his land flips. So this is actually pretty interesting to finally get and you said you're the CEO of Fund and Grow too, right?
Yes. Yep.
Wow, that's crazy. Full circle moment.
Yeah. So yeah, we've been doing this for about 20 years now. Now that we're in 2026, because we incorporated in pretty much the end of 2006. So right in the beginning of 2007. So we're about at our 20-year period of time of being in business, almost as old as my kids.
Wow. Nice.
So Troy's asking, this can be done with a company formed yesterday, for instance, and the answer is yes. You can do this with a brand new entity because again, they're looking at your personal credit before granting the cards. So really, you're going off of your personal credit history, and then they're reporting it to the business credit. They're not reporting it to your personal credit. So yes, you can use a brand new entity, which is a brand new LLC. So is the formation of the new company included in the membership? And the answer to that is yes. We will not pay the state filing fees for you, but we will provide to you everything that you need in order to get started with a new entity. The only thing you'll need to do is pay the state filing fee. We're not going to charge you anything to give you the paperwork to set up your company. That's all built into our client portal. So Tish is asking, what if you're in the low mid 700s but have high utilization? Do you have to pay down to 35% on all of your cards? And the answer is, in order to get the best results, yes, you're going to want to be at 35%, maybe 40% on all of your cards. And if you have any type of savings or a home equity line or any other way of paying it down, you can just temporarily pay it down. Then, once you have access to the business credit cards, you'll be able to use those from that point on. And and you could do a variety of different things with it. You can't exactly pull cash off the business credit cards, but you can do a variety of things with it. So it's absolutely worth it. If you have the ability in any way to pay those cards down, then especially with a 700 score, those 700s, the mid 700s, it'll go up from there. And then you'll be able to get access to a lot of funding that you can then use.
Wait, Ty, go ahead. What your question, Ty?
Sorry. I didn't mean to put my hand up, but no question.
Okay.
But I do want to say, um, just because I've been through this process before, what you guys are offering is actually better than what I received as far as like, the deal, the price and everything. Like I said, I was charged 10% and I went back for a second round and it wasn't at a discount. Like it was another 10%
Ouch.
added. Yeah, exactly. For how much I was able to get. And honestly, I feel like I should have got a lot more than I got as far as business credit. I think I after two rounds I got like $117,000 worth of business credit. So just kind of piggybacking off of what you're offering, that it's a really good offer for anybody that is interested in going with your business.
Yes. So let's just think about that for a minute, guys. 117,000 at 10% funding, at 10% the cost. What was that? That was about like 11,700 that you paid?
Yeah, just about. Actually, a little more. Like, yeah, a little
Yeah.
more. Hmm.
Yeah. Yeah, that's kind of expensive when you
Hmm.
could get it for with us for 34.97. So Fund and Grow has been in business for long. We've been doing card stacking for longer than any other company that I know of in this space. There's a lot of newer companies that have popped up that basically, I would like to say they kind of try to copy what we do, and they have a lot less customers, so they charge each customer more. What we do is we're working with a client long term for a much smaller cost. Like if you had started and you were just one partner with us, that would have been 2,697 for all of those rounds of funding for two rounds. And then you still would have had another round of funding that you've already prepaid. So you would have been able to go for another round without even having to pay anything additional. So, but I think you already can see all that. I just wanted to kind of spell it out for everyone listening.
And real quick, Ari, is there like a cap of how many LLCs you can do? Like, can you do one round of funding with two LLCs or two different rounds of funding?
No, actually, in many cases, it can help us get more funding if you do have multiple entities.
No. And what it would be the funds will be equally divided between two or
Well, it probably wouldn't be equal because we can't just decide, we can't predict exactly what each bank is going to approve for, but we could split up the applications and attach, like if we're doing 5 applications, we could do 3 under one entity and 2 under the other entity, as an example.
ah okay. And then there's no impact to the personal. They just use the personal credit to assess, credit worthiness, all that other stuff, and then it goes on the business credit side.
That's right. Yes. Now, the
Wow.
inquiries will show up on your credit report, but again, that's not like a huge thing. Having the inquiries show up is just part of the process of getting access to funding.
Gotcha. Yeah. There's no way around that.
Yeah.
Okay. Any other question, guys, before we wrap up? Ari, thank you so much for taking the time out to share this information with us.
Yeah, absolutely. Thank you so much for having me on. I appreciate it. And thank you, everyone who came and asked a question. That makes it a lot more engaging. Really appreciate it. And so I'm looking forward to the next time we do another coaching call.
Sweet. All righty, guys.
Thank
Well,
you,
thank you
Ari.
guys.
I
Thank
appreciate
you
it.
guys.
Thank you, guys. Bye bye.
All right. Talk later, guys. See you guys next week.